Over the last 15 months, I've been investing regularly into the stock market to try and grow my wealth, and this is how it's gone for me so far. In this video, I'll be going through exactly what I've invested in and exactly how my strategy's changed over the amount of time I've been investing in, so that you can see exactly the returns I've been able to get and how I've been able to get them. As always, before getting into the video, I'm not a financial advisor, and anything I do say in this video is purely my own opinion or my own strategy that I've personally chosen. But before you invest, you should always do your own research and make sure it's right for you. So me personally, I started investing back in November 2025, and I've managed to grow my portfolio now to around £7,500. But it's not been a smooth ride along the way, especially I had a bit of a downturn when coming back to uni, as I had to put far too much money in and I couldn't afford to maintain that monthly consistency. And that has been my biggest loss, and I'll get into exactly why. So one of the first choices you have to make as an investor is actually choosing which broker you want to go for. And currently there's so many out there, and which is really good for us because that means that fees are dropping and it's becoming more and more competitive to try and get more and more people to use their brokerage. So me personally, I currently use Trading 212 and I have done since I started. So let me show you exactly how this works and how the app works. So if we jump into the app now, and I can show you clearly how this works. So when you jump into the app, you'll see there's 5 options once you've signed up. You have a stock ISA, an invest account, a CFD account, a cash ISA, and then have recently added a SIP, which currently isn't actually on the waiting list for that, but that'll be another cool account to have. So the two that the main benefit are in the UK is a stock ISA and a cash ISA. And for me, I currently put all of my money into a stock ISA. And as you can see, I only have £7,500 in there, and I haven't yet hit my 20,000 ISA limit. So the 20,000 ISA limit, how that works is it allows you to invest up to £20,000 every year, every tax year, and then it'll reset each tax year. And say you've got £20,000 in there and it goes and gains 50%, that £10,000, you're not liable to pay any capital gains tax or any other taxes on, and it's completely free for you to withdraw that £30,000 without paying any additional taxes, which is really, really powerful. So that here is the most important account, especially if you're a UK investor. So within my stocks and shares ISA, what do I actually hold? Well, if we take a look at my account, we can see that obviously I started in November, and over the months, I was able to invest a small amount every month, and I wasn't very consistent. So when I had a bit more money, I saw a bit of green, I threw a bit more money at it. I didn't have a nice clear strategy to start with. And that is what made my first major issue of investing. So after exactly 12 months, I reached my peak in November 2025, and the account reached £8,300, and I had invested a net deposit of just short of £6,100, which was fine. But at this point, I started to run out of money as I returned back to uni, so it meant I didn't invest at all, and I actually had to start withdrawing some money to put me through my studies. So this then actually got to the worst case scenario, and by March, my account had now dropped and shrunk in size to £4,200, and my net deposits, as you can see, was £2,300. So I removed around £3,800 from my stocks and shares ISA, which is less than ideal. And with proper and better planning, I probably would have been able to avoid. However, overall, as you can see, the account is actually currently sitting at £7,500 and a rate of return of 52.3%, which I'm really happy with, and I think is rather good for someone that's invested into just a simple ETF. So let me show you exactly what I personally invest into. So if we look at my portfolio, you can see that I have a main pie, which I aim to put around 90% of my money into, and then I have 5 stock picks. So if we go into my main pie, this is the most important one for me, as it's the one I intend to invest into for as long as possible, and I have no intention of ever selling this. So within my holdings, I hold a Vanguard FTSE All World, and I choose the distributing version, and I'll get to exactly why. But this is basically global exposure and not just focus on the top 500 companies like the S&P 500, which I initially did start with, but I've moved over to a FTSE All World as it gives me global exposure. And when we're uncertain of exactly what can do well, it's a really simple way to invest. Then secondly, this is followed by JGGI, Global Growth and Income Fund. So this actually aims to beat the growth of the S&P 500 by also providing a healthy 4% dividend yield. So it actually hasn't done that for the last sort of 6 months. It's not been brilliant, but fortunately it has that dividend to fall back onto, and I quite like getting it every now and then. And that also brings me on to exactly why I choose a distributing yield for the VWRL, so that when the pie comes, I can get my dividend from VWRL and also receive one from JGGI and then spread it evenly back across the pie. Then the final 10% is made up of physical silver and physical gold. Now this is sort of a hedge against inflation, and also when the times are uncertain with wars, etc., people tend to move their money away into gold, And if you look at gold's value over the long term, it's just rose and rose and rose. Same for many precious metals. So how do I actually aim to stay more consistent? Well, basically, as you can see, I invest every Monday £125 or £100. I do change this occasionally now, depending how much money I have. But between £400 to £500 a month is what I try to invest each month. Now, it's not a lot and it's not gonna fill my stocks and shares ISA, but to be honest, I think it's still a good amount, especially at a young age. When I'm only 22, I have a lot of time for growth and compounding to make it a big difference. And then also you can see my dividends, they're set to auto reinvest. So when I get paid these dividends, it just goes straight into the cash. And once that cash amount is above the required amount to invest into the shares, it straight away goes out and buys the shares at this equal spread. So it'll buy 70% of VWRL, 20% of JGGI, 5%, 5%, and so on. And that's the way it works. I hope you've enjoyed this video. Let me know in the comments below, what else would you like to see about investing and exactly what I personally do.